Good morning. Good morning. I hope you can be able to see me well. Good morning, everybody. If you can hear me, you can say good morning on the chat. I see. Good mornings. Karibuni sana. Karibuni sana. It's great to see you here. So as usual, you can invite a friend. It's a free webinar. Karibuni sana. So take 5 minutes to ask you some few questions you write on the chat, and then we start. Today we are going to talk about navigating modern accounting structures. Navigating modern accounting structure is a very huge topic, a very interesting topic, especially for you to be able to organize your organization in the correct manner, especially when it comes to accounting activities. So karibuni sana. Good morning, everybody. You can tell me on the chat if this is your first time. If this is your first time to see me or to be in this webinar, kindly tell me yes. Is it your first time? Tell me yes. If it is your first time, you can tell me yes. Thank you so much, Mary. Karibu sana. And you can also tell me where you're watching the webinar from. So let me know your location. Where are you? Where are you? Let me know your location. Where are you? Oh, first time, Fred. Thank you so much. First time as I can see you. Karibuni sana. Karibuni sana. Karibuni sana. I can see Nyahururu, Mombasa, Roiro, CBD, Kitengela. Karibuni sana. Just tell me, Diani, South Coast. Wow, thank you so much, Kevin. Watching from Grad. All right, just across the road. Oh, thank you so much. Yes, we are neighbors. Actually, I'm in the Westlands office. So, karibu sana, karibu sana. Tell me where you're watching it from. Marsabit, Utawala, Juja. Your first time, Masi, karibu sana. Bidan from Thika, thank you so much. Good morning, Imara Daima, thank you. Just keep telling me where you're watching from, and my media team is telling me that we are live on Facebook. So we are live on Facebook. So RWK and Associates, we are live on Facebook, and we also have a YouTube channel, so you can be able to watch again. Some of you told me that I was unable to come in for the finance bill 2024. We did it last week on Friday. You can still watch it on the YouTube channel and subscribe, by the way. So you can still watch it. I don't know. Today I'll talk just very few about the finance bill on emerging issues. So just be here. Possibly I'll talk about a few issues that you should note. And the bill is up for public participation, I guess by 28th of this month. So it's about 4 days. You can write to them and do the public participation, what you like, what you don't like about it, or you can come together as a group and do it. So Kelele Shua, just tell me where you're watching from. I want to see diaspora. I want to see diaspora, guys. So thank you so much. So my co-host, you can share You can share the webinar logins and or the passcode for people to be able to share. Just get it and share it to somebody who can be able to also learn something. So my name is Regina Kengori. I'll be taking you through this webinar today, and I know that you're going to learn a lot. I hope you have a notebook. So today is a class and a half. So make sure that you can write something. Of course, you're going to share the notes as usual. We always share those notes. So you're going to have the notes, but you can note something so that when you note it, you can be able to remember correctly. So let's start off. I guess we are far, the time is far much gone. Let's start off and see what we have today. So as I said, we are talking about navigating modern accounting structures. And the reason why we put this like this is because there are so many changes that are happening, even in the accounting world. And also our businesses. The way we used to do business 5 years ago is not the way we are doing business right now. There are so many things and so many even cultural things that are happening, I'll be mentioning. So it needs you to be able to understand and be able to equip your business to survive. And the survival of the business is on the accounting structures that you're able to implement. So this one was put here by someone. Accounting is the art of turning chaos into clarity and confusion into financial wisdom. But the chaos, I know some of our organization, we are in chaos and confusion. But the moment you understand accounting, you can be able to turn around and have clarity and have financial wisdom. Of course, most of these accounting structures and accounting systems that we put in, they help in decision making. So most of our organizations are in confusion and in debt in a lot of issues because we did not understand, we did not make the good side, we did not make a good financial decision. And I'll be talking about that. And we did not make a good financial decision because we did not have records and data so that you can be able to make that financial decisions. Accounting is not just about counting beans, it is about making every bean count. So that's for you. So we're going to talk about the accounting structures overview. This is the content for the day. Importance of the accounting structures, components, significance documents in the accounting practices, especially documentation. I already talked about documentation. There's a time we had a webinar about bookkeeping, but we'll still pull along something. Effective accounting practices. I'll talk about a bit of regulatory bodies in accounting, and I also talk about emerging issues. At the emerging issues, I will talk about the Finance Bill 2024, just a few highlights. So let's proceed. What is accounting structures? Refer to organized framework and system used by organization to manage its information. And every business has it has business information with it. It has data. So you cannot operate an organization or a business that you want really to grow, that you don't have data, you don't have, and as you proceed, the framework comprises policies, procedures, controls, the software or manual system used to collect data, records, storage, report financial data. So there's a whole line of you having the correct structures. So some of you will say, my business is very small, so I don't have policies and procedures. But there is a flow. Even if it is not written, there is a flow of activities. So if you're operating a business that is in manufacturing, there is a way you order, there is a way those items come to the organization, there is the way you put them in a system or in a software. Even if it's a manual record, there is a way you record. you keep the data, you keep the file. So there is a process flow that you're having, procedures within the organization. So to strengthen the procedures, then the policies come in. So you have a financial policy that comprises what you're supposed to be doing in finance. We have HR, so HR policies. So these HR policies will come in to say, how do we hire, how do we fire, how do we go for leave. There's a lot of line when it comes to human resource. How do you appraise people? How do you move somebody from this JD to another? So there's a whole line when it comes to HR. And then we have so many policies that you can complement, that you can have in your organization, depending on the nature of your business. So the procedures that you're having, the framework that you're having, it is strengthened by the policies that we have. We have controls, internal controls, and external controls within the business, within the organization. And this is something that when we talk about modern accounting structures, control is key. Long time ago, 5 years ago, 10 years ago, controls was not a big issue like it is an issue right now. There's a lot of cultural changes, a lot of ethical changes, such that trust, you cannot operate a business on trust. So a long time ago, I've been doing audit and tax for 10 years. So I remember like 10 years ago, someone would tell me the cashier is my sister. So the control is sister, is trust. But right now, even that sister has ethical issues. So controls has to be implemented at every single position in your business, regardless of the person that is there. Having structures that are flawless, that are working, that you can give that cashier to anybody who is qualified for that job, and you know that they deliver the job and there's nothing that is going wrong. So controls at every level has to be implemented and have to be explained. So there's also times that I talk about internal controls. So when we launch the internal control training, come along and learn about control, because I think this is one of the biggest issues when we talk about the issues that we are handling at this point. The software, we have a lot of software. So what is the correct software, accounting software for my business? So, and understanding it. So is my business has a lot of stock? Do I need an inventory software? We're doing a lot of petty cash. Do I need to have a petty cash management system? And all of these systems are there. You can have systems that are even managing your stock, others are managing your payroll. And how do you put them together so that they can work for you? And also system, when I talk about internal audit, I also talk about accounting system audit. It's not just having systems, but these systems should also be audited, so that when you're bringing them in the business, they are working for you. They are not working against the business. So sometimes when I go out and we are doing audit, because we check also the system, we find there are so many errors, double entry of data, deletion of data, rights have a problem. So also the controls within the software, it is very important. And if you have the manual system, and I'm believing right now, we are not in the eras, 5 years, 10 years, that when I would talk about let's put this business in a system, and someone would look like, no. Right now, every business want to be in a system, want to be in a software. So manual, and also when we are doing the accounting systems, we also need the manual recording that is supposed to be there. So how do we store this data? How do we put it together? How do we save it? And how do we use all this to give us a financial reporting that is correct? So the primary purpose of accounting structures is to ensure accuracy, consistency, compliance with the regulatory standard in financial planning. So what are some of the importance of accounting structures? Financial accuracy. And this is the biggest portion of the having the correct structures. It's not just for filing KRA data or filing audits. For you as a business owner, I don't know if you're having business owners in the chat. Sometimes I love talking to them because when I talk to you, okay, someone is saying they can't see the slides. So I hope you can be able to see them now. So are you able to see the slides? So I need just one yes. Yes, thank you, Faith. Okay, thank you for that. So when we talk about financial accuracy, that you are able to make good financial decision out of the reporting data that you have received. So even big organizations and big businesses, the business has been there for 10 years, 15 years. The business owner cannot explain the profits within the organization. And this is a story they will tell me, that the moment I pay employees, then I pay the loans, then at home there's food and the children go to school, the business is okay. That is not a basis to make a financial decision. It is okay because you're able to meet the daily needs for your organization and at home. But how do you know that you can scale the business to the next level? If a bank comes and tells you, we can give you 50 million to scale up your business, how can you know that I can get this loan and truly be able to pay that loan? If you're having products within the organization that are making losses, that are dragging the rest of the products down, how can you make a decision to drop some of these products? So financial accuracy is key. And the moment you have the correct record keeping, you can be able to make such decisions. And I've seen so many people having issues because when you don't make the correct decision, you have cash flow issues. You start losing customers because you cannot meet your business obligations. You start losing employees because you cannot even be able to pay them. You start having a lot of losses, internal control issues. So financial accuracy is key. Regulatory compliance. So when you have the correct accounting structures, like now we are supposed to be doing audit reports, and I'm supposing and I'm hoping that people in this chat, you've done your audits. And if you've not been able to do your audits for January to December, we can still help you do that at affordable prices. So when you have them, you're able to understand that at this particular point, this is when I should be able to file my audits. This is when I should be able to do my monthly records so that you can avoid penalties and interest. And you can be able to plan. People ask me, how do we survive? How do our businesses survive right now where there are so many tax and compliance issues? One of the key areas is you having the correct accounting structures, organizing your business in a manner that you can be able to understand. You understand your profits, you understand your taxes, you have a tax planning that is working for you. Then you can you not be stressed on compliance, especially for taxes. Internal controls, accounting structures will help you establish internal controls to prevent fraud, errors, mismanagement of funds, safeguarding company assets. And I always say that internal controls should be put and should be implemented and communicated. So especially when the business is unable to make financial decisions, so you took a loan, right now you are unable to pay, what happens? Because you're stressed up, internal controls suffer. This is an organization that you find there is a lot of fraud, stock inventories are not kept well. There is no monitoring of sales and how you're receiving your money, how you're doing stock. So many things start falling apart, especially where you're having even employees and you're not able to pay them on time. The employees start thinking on how they are going to get something, they are going to get some money to survive, and they are still going to get that money within the organization. So you suffer so many things. So internal controls are very, very important. And just being able to structure the business in a very way that it can even run in the foreseeable future. So performance monitoring, so the structures enable you monitor financial performance through systematic recording and reporting. I've talked about this. Performance, you can be able to know a different product, how it's managing, how it's performing. There are businesses that are selected in sectors. So you have a distribution line. This distribution line, one is in Mount Kenya, the other one Eastern region, Rift Valley. You can be able to know the performance of each region. You can know the strength. Is my product within a certain community? Do I pull my strength here, or do I pull my strength in this place? So there's a lot of when you have the accounting structures correctly, you can be able to make some of these decisions. Resource allocation, similar. You're able to efficiently allocate your resources in the correct way. So even when you get a loan or a debt or equity, you can be able to assign that money in the correct manner. So sometimes I see a lot of our businesses expanding so quickly, or you're doing one business. This mother business that is helping you survive is a business that is funding another loan, that is trying to incorporate another business. So many decisions that are not calculated so well. So resource allocation. Do I need to get a loan and start another business, or this loan, can I pull this loan in this business and allocate these resources in a particular item within the business and make more money? So you're able to understand how to do those resource allocation, budgeting and forecasting. So the support and the development of accurate budget and help you to forecast, helping business plan for future needs. So at the beginning, especially right now when we are doing audits, I love to discuss audits with my clients. And when we are discussing audits, we always discuss issues. What are we planning for next year? What are we planning for this calendar year, 2024? So you can be, when clients will tell me, possibly right now they'll tell me, Regina, I want to do this and this and this. We can be able to budget. We want to build a pack house. Can we be able to budget and see if we can be able to do the correct saving for this? Can we, even if we take a loan, will the business survive the payment of this? So budgeting will help you when you have the correct accounting system. Decision-making support, I've really talked about decision-making. You are able to make strategic and operational decisions that can enhance the overall business management. Investor confidence. Some of you want to attract investors, but yet you've not organized your business. So one of the issues, even when you go to investor trainings, the first thing they'll ask you is, are your books in order? Because the investor want to clearly see what are the profits. If I come and invest 10 million in your business, what is the return? How much will be my returns in this investment that I'm doing? And at what particular point or at what particular period of time? They want to see a business that is organized in the correct manner. So the correct accounting structures help the investor to have a lot of confidence. Creditworthiness, are you looking for a loan? Whoever is giving you that, they want to see well-maintained accounting records. And your payment, are you able to pay on time? And you're able to pay on time because you're able to be organized. So the more you're organized, the more you are able to meet not just loans, but all the company's obligations. You are able to do them on time. There are people who look for salaries when we hit 30th. That is the time they're saying, oh, how much do we need for salaries? And they start running up and down. So it means that there's something not right when it comes to the accounting structures. Tax compliance. I've talked about tax compliance. So when you have the proper structures, you're able to do tax planning. Some of us, we are having, right now, we had a lot of, some company had a lot of penalties, especially not paying, because of not paying installment taxes. So when you're able to have correct structures, you can do a correct tax planning, and you can be able to bring your business to level of profitability. So the other one is profitability analysis. So you're able to analyze your business and understand the profitability rate. Where is it? And our businesses are different. There are businesses that are cash-based. Like everybody buys on cash, like a supermarket. You don't go there and say, no, I'll pay tomorrow. Or a shop where you're buying bread and milk. There are places where you have to buy on cash, and that is a cash business. It's a different business. When you come to other business, there are business that give you credit, 30 days, 60 days, 90 days. Those are how you manage your business is different from the one who is doing cash basis. So mostly you will find someone who is doing cash business. They're also buying items on cash. So at what time do you know that this is my profitability rate, profitability position? For someone who is selling in cash, remember, when we talk about sales, even credit sales are sales. When you're recognizing sales in a month, you find that month I sold 10 million, but out of this 10 million, I've received 3 million, 5 million. 5 million is out there with customers. So at what particular point do you understand the business that at this particular point are profitable, and you can be able to even plan? You're planning for your decision according to the nature of the business that you're having. There are businesses that people, even if it's 30 days, people will pay. There are other businesses that are paid in advance. And I guess those are the businesses we should do, especially right now. There are businesses that are paid in advance. So according to the nature of business, then you can be able to do some of this. Cost control. So cost control is where you're able to understand the costings in our business. Some of us don't do costings. So you find that possibly you're selling a product. That product, you yourself, you are a distributor or you are a retail shop. So you are buying that product from wherever, from the wholesaler or from the manufacturer. Do you do costings, transport costs, cost of offloading, taking to the client, loading, everything? Can we put the costs? If this is a product that, for instance, you're selling what, flour, that sack of flour or that bundle of flour, how much is the cost by the time you're selling it to your customer? If you are doing production, and this, especially for manufacturers, we are unable to really do a lot of cost analysis, cost of manufacturing that good. So you may find you're manufacturing possibly a product like water. Did you consider the whole entire cost? Or you're producing juice, the component of that, plus excise duty, VAT, there's so many taxes, everything, and look at your profit margin. And also consider that you're selling to somebody on credit, they are going to pay within 30 days, other 60 days, cost of recovery of that money, so many things. So you may end up seeing, like at the end of the day, you're losing you're losing your profits. Sometimes you may find a manufacturer is selling items and they have a car. So a customer will ask possibly for 10 sacks of something. But this pickup is supposed to move, the capacity is 50 bags, that's for instance. But the customer is asking for 10 bags and a decision is made to deliver to them. Did you consider that you could have loaded the full 50 and you go take to the next customer and the next one and the next? Sometimes you find organizations have a lot of fuel costs that are not explainable. So those are some of the cost controls that you should consider, and especially right now because we are in a very harsh economic environment. Cutting costs is one of the biggest strategy for you to survive this season. So understand your costing and see how you can do controls. Audit facilitation, when you have the correct structures, even us when we come as auditors, we find a trial balance that is balancing. When we are doing data verification, the files are kept so well, the system, the accounting system is updated correctly. And I know so many people here are accountant. When we come to your organization and we find that the last time you updated expenses was 3 months ago, you have incomplete records, and you have them because the manager or the directors, they don't know the accountings, the QuickBooks that you're using, or the accounting structure, the accounting software that you're using. They cannot be able to monitor you. So because they don't monitor you, you don't complete the whole you have incomplete records. So audit facilitation. Some of us, when we populate data from your accounting software, if it is your sales, the sales is it was supposed to be 100 million. We populate that data, we find it is 150 million, and we cannot even explain the 50 million where it came from. You find that there were so many cancellation of invoices, double entries, just because somebody is not monitoring that the data is incorrect. So many issues with that. Cash flow management, proper accounting records and accounting structures, they help in cash flow management. So I said, because we are in a very harsh economic environment, I said one of the strategies is monitoring your cost. The other biggest strategy to survive is cash flow management, that you're able to manage, prowl back your cash flow and manage your business. So the moment you don't keep proper records, you cannot know where the cash flow leaks, where the losses are. You cannot be able to pull the business together. You don't know, you keep paying for items, you keep paying for fuel, some of the people will pay even for wages. You're having like 10 cashiers who are coming every day. You never calculated that those 10 cashiers amount to, possibly if they're paid 500, that is 5,000 per day. 5,000 per day, if you're doing 20 days, that's 100,000. Can you do something differently to save that 100,000? Or are these people coming in being utilized fully? And what is their cost vis-a-vis input vis-a-vis output? Do we do those cost benefit analysis to say, if I bring down my payroll together and I say I'm paying a payroll of 2-3 million in a month, what is this? Because the business is training. Are there people that you can merge activities together and be able to do them? Can we incorporate a machine, a software that can help this item that is being packaged, so that we do away with these people? So those are some of the things, so that you save on cash flow. Do we need to have people who are asking, do we need to give discounts to our customers so that we can sell in cash, or we can get our cash as quickly as possible? So those are some of the ideas. And sometimes I find organizations that are doing, what do you call them? Overdrafts. So this month you're on overdraft, the other month then you pick a loan. There are clients who tell me, Regina, I want to pick a loan. I want an additional loan. After 3 months, they tell me, no, I need you to prepare something. I need an additional loan. After 2 other months, oh, I need the bank is asking for ABCD because they want to give me an overdraft. Something is wrong. If you're my client, I'll tell you for sure there's something not happening. There's something that before you get that loan, there's something that you should be doing, especially on your cash flow. And if that trend continues, the next thing is that the business is going to be in a very hard position and it might even collapse. Risk management, by providing clear financial picture, accounting structures help in identifying and mitigating financial risk. Like now we are having a risk on the loans. The interest rates are becoming more and more. So how do you mitigate that risk? What are the risks within the organization? Have you ever done a risk analysis of your business? Competition, internal controls risk. What are the risks within what is the survival of your business? Have you mitigated? Have you ever seen businesses that, especially the Asian businesses, that run in generations? You may even find it's a hardware, as simple as that. It's a hardware, but that hardware has been operational for 30, 40 years, 50 years since independence. It's been there. What are they doing that we are not doing? That when you open your hardware, you're closing within 2-3 months, 2-3 years, and by the time you're closing in loans and in a lot of debt. That even that company pulling itself to open another business is a whole different story. So what are they doing? And one of the issues that I mentioned for the Asian companies that you're working with, that we work with, is that first of all, they have a lot of very good accounting structures, very good. If we do the business that way, the accounting system flows. Those are the places you find even the accounting data is maintained in software and maintained in manual records. Like there is a bank reconciliation in the software they are using, and there is another bank reconciliation in a book. Accounting structures, the correct one. Then you find most of their businesses they don't have a lot of debt. A lot of loans. They are able to manage their cash flow. That is one of their biggest strengths. And they are able to really manage their costs. A lot of costs. That's why you find most of us who has ever worked with Asians, we say they are stingy, but it's a cost management element. Legal protection. So the accurate records will serve as legal evidence in disputes. Have you ever been in a business with a legal dispute? If you don't have record keeping in the correct manner, do you know you can even and this is something that I've really noted. Your supplier might see that you have a gap in your record keeping. And because you have a gap, they one day come and tell you, because you're paying them. So, and it is on credit, 30 days, 60 days, one day, and they're sending you statement. One day they don't send you statement, the other portion, one day they come and they tell you that you're supposed to pay them 10 million. And for you, you say, no, I'm supposed to pay you 5 million, and you don't have records. It becomes a legal issue, and so many things that amount to legal issues. Sometimes you may find that you're paying a check, but you don't even have a copy of that check. Someone will even tell you, we didn't pick, who picked that check in your office? There are so many legal issues when it comes to how we do business. So you need evidence. You need to protect your data. Strategic planning, you're able to strategic plan. Operational efficiency, let me move from this. I know I've really explained on the importance. Operational efficiency, growth management. You are able to understand, when do we open another business? When do we expand? When do we diversify to another business? When do I move out of this business as a director? You can even choose to do that. When can I retire as a director? Have I put enough structures within the organization? Can I buy a machine? There are some of my clients, especially right now, we are doing audits, and they tell me, Regina, next year we want to implement a plant, a manufacturing plant. And I ask a cost, and they tell me the manufacturing plant is 150 million, 200 million. And we start planning on it. Growth management. Is the business at the position where it can have a plant that is worth this much money? And what will be the level, the next level for this business? Accounting structures, they help you make those decisions. So what are the components? I know after understanding the importance, now you want to know, what are the components of these accounting structures? Let's see. And you can keep asking me a question on my chat. So ask a question on my chat. I'll be able to answer the question. So before I look at your question, let's talk about the components. So the first one is accounting software. So modern accounting structures often utilize accounting software system to automate processes, streamline data entry, and generate financial reporting efficiently. So the first one is accounting software. Do you have the correct accounting software for your business? Is it able to manage your business? Is it able to do reconciliations? Stock reconciliation, bank reconciliation? Can it populate a cash flow? Can it give a profit and loss which is correct? Can you be able to incorporate expenses in the correct manner? Can you be able to, what is the reporting level, approval levels within the system? Can you create a customer and somebody else is able to approve that customer? Most of the accounting software that we use have so many issues. You may find, and this is where you find, because people, right now we are having, an apology for me making this comment. Apologize for making this comment, but I want to make it. So these are not the seasons where the staff within the organization would pick their stocks and put in their pocket. You know, the way the way somebody would have security officers at the gate, and they touch your body so that they find that if you've carried something. Those times ended 5 years ago or 10 years ago. Right now, any theft is done through the accounting system, is done through the systems that we are having in our organizations. So is the system efficient enough? Is it a risky kind of affair of you having that accounting software? So this is what I have experienced before. You go to a system and you find that there's somebody here, a cashier, who is able to generate a customer. They can be able to generate a customer. And this customer is a fictitious customer. They are able to get an invoice. Because one of the rules of you getting stocks out of the business is you creating an invoice or a receipt. So a receipt is created, and these goods are stated that they are going to Regina, and these goods get out of the store and they leave. The moment they leave, because this is a fictitious customer, they leave. The same cashier is supposed to come back and say the money was paid. So they go back to the system and they say they received the money. They did not actually receive the money, or they delete this data, or they backdate this data. So the invoice is done today, is backdated last year. Yes. Or they come back and say this customer paid via M-Pesa, or they pick, or they have a customer who is genuine, then they pick cash and they say it is via M-Pesa. There's so many theft that is happening on our accounting software. So is the accounting software working for you or against the company? And at this point, you cannot operate your business in a manual way. So this is a battle that we did 5 years ago, where I would go to a client and I look all the paperwork, the disorganization in the office, and I say, you are even losing because you don't have an accounting software. But yet we have implemented this accounting software, but is it working for us? Do we do accounting software audits? Do we regularly monitor those softwares so that at the end of the day, everything is done? Do we have complete records? Sometimes especially when KRA is asking for data, because now you cannot go to KRA and tell them, I don't have data in audit, I don't have ledgers, purchases ledger and sales ledger. Mostly they will ask you for sales ledger. Especially in the magnitude of your business. You might say, I don't have ledgers because you're doing 5 million or 3 million turnover in a year. They will understand. But if you're doing 50 million and 100 million and you tell them that I don't have sales ledger, those are lies. So are you having a correct sales ledger that is reconciled and balancing? In a month, you did invoicing worth 10 million, and the accounting system is able to flow. And this also is coming to the ITIMs. I'll talk about ITIMs and the complication with ITIMs, especially on the accounting structures and what we are doing under ITIMs. So is that invoicing that was done, is it the same invoicing in the sales ledger? Sometimes when I come to your organization and KRA has asked for sales ledger for last year, 2023, 2022, 2025, I said data should be kept for 5 years. So when we pull that data, we find that the sales ledger are giving us 200 million, yet you filed 100 million or 150 million. So we have 50 million that we don't know if it was sales that was existing, or was it data that was reconciliation that was not done correctly. So sometimes you look at how we do those entries. There are errors, there are backdating, there are so many things. So is the accounting software working for you? Is it being audited? Does it have controls? So that is a question that you answer, especially for you to have the correct accounting structures. And by the way, we have an accounting system, an accounting software that we are launching this month, the month of June. So when we do that, I'll be here to tell you the advantages and how you're going to use it. So compliance and reporting. So accounting structures, the component, compliance and reporting, we are having the taxes, tax planning, compliances, any legal compliance for your business is kept well. Reporting, do we get a management report at the end of the month? There are some organizations, they always have Monday meeting. So Monday meeting has to be there with a management report for a week. As in the management or the management want to see the sales for the week, the purchases, the expenses, the reports from customers, feedback, invoicing. That is the correct way of managing the business. So are we getting to a point where there are correct management reports that are there regularly? Accounting policies and procedures. So are we having policies and procedures? I said policies are documents, but we're also having policies, procedures, and these procedures, they could be the nature of how you run your business. Actually, if you're operating a hardware or you're operating an accounting firm like us, how we are doing it and how our other organizations are doing it could be different. But are these procedures communicated, and are they written down that everybody can understand? The guidelines and the rules, are they defined correctly? That this is how we record, this is how we report, this is how we order, this is how the payment come in. When the payment come in, this is how you, is it communicated correctly? When you hire, this is how we hire. This is the person who is supposed to do orientation. This is how we dress. This is how we talk. This is how we talk to customers. Those procedures should be written down. And sometimes they don't have to be, you don't have even to call somebody. It's something that you can develop within the organization and say, as management, this is the procedures of running this business. Then you go to the next level of having policies. So accounting policies are important in the organization. So that is a next level, and it is a very, especially is a very good level that even when you hire an accountant, the first thing they do is to read the rules and the regulation, the policies, the procedures, very important. Cost accounting systems. So we are talking about the software, but we are also talking about cost accounting system. Do we have cost accounting system to track, analyze the cost within the organization in production of the goods and services and the services that we're selling? Pricing decision, making the pricing decisions. How do you make a pricing decision for you as an accountant if you're doing bookkeeping for your customers? For an organization that have so many products, how do you price your products? Or do you look, or do you call your competitor, or do you send somebody to your competitor and ask, how much do they sell this thing? And they say 200 shilling. Then you say yourself, you say, I'm going to sell it at 190. Did you do a cost? Are you even break even? Are you doing, are you at point of break even? Do you do cost benefit analysis? So cost accounting system are very important. And especially now that we have a lot of fluctuations in the dollar, in fuel, in electricity, so many cost changes. So do you do costs? The organization, by the way, they are very efficient in this. They have to analyze their costs every week. You find even every month, they even have cost accountant. That is very good. So, cost accounting system are very important. Financial risk management. This component involves identifying, assessing, and mitigating financial risks such as market risk, credit risk, liquidity risk, to protect the company's financial health. So financial risk management. And this is just discussions. When you're discussing accounting structures, sometimes this, as simple as having that understanding of financial risk, even calling your management or your team leaders and telling them this Friday afternoon, we are going to discuss about financial risk of this business. And you may even wonder or get amazed by the many ideas that they are going to give you. So just having that documentation and always talking about some of these items, you're able to have the right structures. Cash management, I talked about cash flow is one of the issues. Cash management systems to monitor and optimize cash flow, ensure that the company has sufficient liquidity to meet its obligations and capitalize on opportunities. So this is having a system. And when I talk about a system, I'm not just talking about an accounting system or a software. I'm also talking about having a structure, and I said businesses are different. There is a different that is always on credit. There is others on cash, even others that are you pay on in advance. There are others that you have to do a lot of marketing for the business to drive. So having all this, that in a month we spend 20,000 on fuel, or we spend 100,000 or 500,000. We also spend this much money on this. So you having a plan that for us to meet all these obligations, how much should we sell in a month? How much should we put out there? So, and especially for you that want to sell more, that is how you make those decisions. You don't wake up one morning and say, we are going to double our sales. No, you're going to double your sales according to the record that you have kept. So by the time you double your sales, do you have double production of the items that you want to sell? Do you have money to procure? Because you cannot sell if you don't have what you're selling. So do you have money to procure what you're supposed to sell? And do you have also expenses? Because the moment you double your sales, you also double your expenses. Do you have employees within the organization to do that? So, and at a particular point, if you the organization that have to pay advance salaries, they are also specific items that they are supposed to pay. They are like manufacturing, they pay a lot of electricity. You may find a company that is paying 50 million in electricity every month. So how do you manage your cash flow such that it will not be 25th when you're supposed to be paying for electricity and the machines fail? Do you have guarantees? There are others that will go to bank and ask for a guarantee that the bank will assure them that on that particular day, you're going to pay for your electricity, and this is how you're supposed to be paying us. So at what time do you make such decisions? Payroll and employees benefit accounting. So how do we look at our employees? Do we do appraisals for them? How do you monitor that this employee is performing better than the other one? At what particular point do we appraise them? And which is the system of appraisal? So this helps the managers to process payrolls and employees benefit. So, and you're able to also comply with the labor rules and regulations. So I find some organization will do this on a quarterly basis. They can do it on a quarterly basis or half year and look at their staff. Right now, having the correct human resource within your organization, especially now, is key. Is very key. The employees of your organization are assets, like the way you're having stock and having machinery within they are so important. So how do you monitor how you're managing them and making sure that you're able to operate as a team? Most of the businesses, by the way, right now, who are thriving, they are businesses that are able to bring their employees together, do staff training, team building, build their team. So how do you do that in a systematic way? So first of all, we are doing appraisals in a systematic way. You don't wake up one morning and you just say, I'm going to appraise this one and this one and I'm not going to appraise this. No, it has to be in a system. I'm not a HR person. It has to be systematic way. That systematic way is understood by everybody, so that people don't feel neglected or they don't feel they belong in that organization. And then team building activities, staff training to push them to the next level, and just having a good working environment. By the way, I said, as I talked before, that for you to survive right now in this hard economic time, I said First of all, you have to monitor your cash flows. Second, you have to cut down your costs. Third, and this put it somewhere because it's not in my notes, you have to understand your employees and motivate them. You have a motivated team. This is not a season where you wake up one morning and you make noise to everybody. You're going to make things worse. So even if you're having pressure for the business, then employees, you have to have employees that are working in your team and they are motivated for the business. Inventory management. For the business with the inventory, having a correct inventory management is key. And you can have this as a software. This is key, especially for businesses that have a lot of stock. By the way, stock is business. For people who are doing stocks, like when I come to your organization and I find that you have 10 million worth of stock, you have to show me an inventory management system. Otherwise, I know that there are internal control issues. So when you're having, if stock is your business, you have to guard that stock. So yesterday I met one of our clients, is an international client, and they are doing business in East Africa, but they're also having business in the UK, in India, and in India they have so many locations. You were telling me they are having 7 locations, but the stock they sell they sell stock, machinery, spares for production machines. He told me they are very small items, but they cost so much. He told me, because I've been in this business for a long time, and stocks is what is the most critical part. In India, we have put these stocks together in one location. So the stock is managed in one location. For all the other branches who are selling, it is a sales office. So when something is ordered, it is delivered the same day. So from the main store, they plan on how the item is delivered to subsequent branches. Can you imagine? So what kind of business do you do? And are you losing on stocks? So when we talk about stock management system, we also talk about manual recording. Do you do physical counting? There are other organizations that we audit that do stocks in the morning and in the evening. So in the morning, and the stocks is kept, is a lot of stock, but it is kept in a certain way that within 20-30 minutes, all the stock count is done. There's a storekeeper, and they are supposed to be doing store monitoring, and there are other accountants. And you may find that the storekeeper does his stocks, the accountant is able to do their stock, and when the goods are leaving the organization, at the point of leaving at the door, there's also a security guard who also monitors the stock. So there's a lot of internal control for that stock. So if you're in business that has a lot of, and by the way, I also find that the same industry, when I go to audit the same industry, when I go to audit same business, but in the same industry, you find that they don't even monitor stocks. So when they are talking about losses and everything, I'm able to pick that for this particular business, inventory management is key. And I've said we do an inventory management system, but we also maintain physical records, and we do physical counting. You can do it in the morning, you can do it in the evening, and compare. And do those reconciliation every single day. So when you do reconciliation, make sure that you monitor variances and you get correct data while the variances are there. Asset management. So asset management system to track and manage acquisition, depreciation, disposal of assets. Most of us don't consider assets. So when you look at organizations that are able to incorporate asset management system, they can track. They have even barcodes. So when I'm doing audit for you, I ask you for asset registers. So the organization will have barcodes on their assets. So they have tables, they have chairs, they have vehicles, they track their assets. By the time something is being bought, there's a way to monitor, and there's also asset stocks. So some of our organization, for instance, let me give an example. You're operating a school that has a lot of chairs, tables, beds. For you, asset management system is key. So according to your nature of business, barcoding is important. There are other businesses, like for instance, business that hire items. For instance, chairs, and you hire tents. Asset management is key. Other businesses that do hiring of kitchen utensils. So you are hiring out plates and all that is a whole business. So even barcoding, you can choose to do that. Financial statements, this include the income statement, balance sheet. So at the end of all the day, all these items, do we have financial records kept on a month? Management records. Are we able to summarize the data and have the data somewhere? That even when I come to your organization, you can tell me this was management records for January. Like for like now, we are 4 months in this year 2024. Some of our business have never done a management report or to just monitor financial performance. That's a red flag. So financial statements are very, very important. Budgeting and forecasting systems. Do we budget at the beginning of the year for a full year? Do we budget at the beginning of the month for that month? Do we budget at the beginning of the week for that week? As in processes upon processes. And those are the things that are, let me tell you something. If you go to some of these organizations, and last 2 months ago, we met somewhere for a course, an international course, and one of the member, we were having a class, came from Dagote group of companies, and he was based in Ghana. He told me that one of the things they do a lot of reporting and a lot of meetings. Actually, he was feeling overwhelmed by the level of reporting and the meetings and the planning and the forecasting and the budgeting. But that is what is graduating the organization from level 1 to level 2. As in, everything has to be flawless. The processes has to be flawless. The financial recording should be there. The accounting system is balancing and it is correctly made. The budgeting and forecasting is there. So you don't make a decision just because your competitor. This is how we do business. And I don't know who am I talking to. Let me see. Our competitor, just because our competitor is buying a car, you want to buy a car. The competitor bought a truck. Now you go to the bank, you want a truck. Those things, one of these fine days, the business is gonna collapse because of wrong decision making. So stick to your lane and have processes within the organization. When the business is subjected to processes and these accounting structures, it definitely will grow. It will grow even if you don't get a loan, but these processes are kept there. The cash flow management is done properly. The costing are done properly. The people within the organization can be able to understand. Sorry. Sorry for that. So as long as you're able to implement this, then growth is inevitable. You have to grow. You have to push your business to the next level. So let's concentrate on what is key within our organization. So what are the significant documents for effective accounting? So after I talked about the component, what are the documentation for this effective accounting system? Invoicing. So we are selling. And when I talk about bookkeeping, I talk about all this recording. So here I'll just mention. So when you come for the book, I really talk about this. So invoicing, do we have an invoicing system? And I say that the invoicing should have internal control. Who creates a customer? Who does the approval? If you are selling on credit, who verifies that credit? Are we just selling on credit? There are places where you find a customer bought on credit, then after 2 days is buying on credit, after a month, they are not even paying. Who approves that credit? So invoicing is key, and just not invoicing, the whole process of invoicing at the point where this person is becoming a customer, they are able to regular. By the time we are telling them that they are actually a customer and their credit worthiness is okay, is a process. The pricing of the items, the payment and the due dates, who follow? If they say, I'm going to pay within 7 days, who follows that payment? And when that payment is done, how do we incorporate it in the system? Do we do bank reconciliations? or we just having an M-Pesa line that somebody just is writing on our M-Pesa form, and the things we do in our organization. Receipt serves as evidence of payment received from customers or proof of expense incurred by business, supporting accurate recording and reconciliation of transactions. So when we get that payment, do we receipt it correctly in the system? And do we do reconciliations for that? Purchases order. This is LPOs. How do you purchase? Do you issue an LPO? How do you know that I'm purchasing to the right person? Is giving me quantities that are okay and items that I require. And we know some of these things when we listen to some of these big companies, how they failed. You find some of them had so many control issues. You find an organization, they are able to order. At the point of entry, the items did not even enter, or they entered half and half left. So how do we do purchasing? Are we getting the correct thing from the correct person? How did we identify our supplier? Those are procurement policies. And what are the terms agreed upon? And services. Sales order. When we order a sales and generate a response to the customer, how do the customer get to know you? How do they order? When they order, what are the days to their order being monitored? One of the time we went to do a process review for a company. And when we looked at the book, there's a receptionist who picks the phone and records this needed who. We found that there were customers who ordered, and even after 10 days, the order is written there. The customer was not followed back. They were not called back. You may even find the customer called 3 other times asking, "Mzigo iko wapi?" You know, that whole process. How do we simplify the process and make sure that the customer service is able to get what they are looking for within the correct time? And if they are not able to get what they are looking for in the correct time, how do we communicate it? Because sometimes there are issues within the organization. How do we communicate that? Bank statements. The documents provide records. So do we have bank statements within the organization and bank reconciliation? Payroll records. Are we able to record this staff within the organizations, the timesheet, when they come in the organization, did they record it? Did we do the barcoding? What do we call it? Biometric. When they come in, the organization where they do biometric, and the biometric is used to even pay them, even calculate their payment. Did we do that? Did they, if there's no that, did they sign somewhere? If there are leaves, how did we do that? And if we're having cashiers, how did we record that? Do we have cashier wages sheets that they sign? Do we have documents? How do you term this person as an employee? Do they have a JD? Is there a file open for them and their CV, their passport? So when they come in the organization, even the wages, you pick somebody outside there to come and clean the office or do a manual. There's the bare minimum. The bare minimum is you come with your ID. Then we photocopy your ID. The organization where they even have to, someone is even gets to get your they even take a picture of you, even for you to be able to do that wages, to be a casual for the organization. So what is your bare minimum for wage, a casual person? What are the recording for that? For payroll records. Expense reporting. So employees submit expense reports. So when you're claiming an expense, a reimbursement, travel, meals, supplies, how did we do that report? So do we have the receipt, the actual receipt? And I said an actual receipt is a supporting document. So when you do a payment, for instance, for fuel, you cannot term the M-Pesa receipt as a source document that I paid because I have this M-Pesa receipt. No, you should have the receipt, the fuel receipt with you. So for expenses, do we have a payment voucher, a check, a photocopy of the check? Did somebody sign when they were receiving this check on the payment voucher? Do you have an invoice from this supplier or a receipt, a delivery note? If these items came to your organization and you're paying for it, did you do a good received note? So if you're having a supplier, the supplier supplies you items. First of all, was there an LPO sent to them? Then a file, a record should be there. When they brought in items, did we do a good received note? Should be there. If there were returns, was there a credit note signed? Was there any document for any return there? Did the supplier provide a delivery note and an invoice? Now, when we are coming to pay them, are there a supplier statement that you have provided? Then we do a check, a payment voucher. This person is able to sign, and this check, photocopy of that check there, as in a whole documentation done properly, that in future you have evidence of what you've done. And this invoicing, by the way, this invoice should be ITIM's invoice. I'm going to talk about ITIM's. Is it an ITIM invoice, and how do you validate the invoice? So I'll talk about that. Asset register, are we registering our assets when they come into the organization? And I've talked about asset inventory records to track our inventory. I talk about the system, the manual recording, inventory reconciliation. So are we having audit reports from your auditor? So, and there's audit reports. Did they have a management report? By the way, if your auditor is not giving you management report to show the weaknesses, observations, weaknesses, recommendation of your system, accounting system and structures, and looking at your accounting system and structures, come to us. So come to us. We're going to give you affordable rates. So you're having accounting reports, audit reports, and also management reports, financial recording, very important. Contract agreements. If your business, you're doing contracts and agreement with the customers, suppliers, lenders, do you have a document, a file for that? Insurance policies. So if you also have insurances, do you have recording for that? Backup of your files. We say that your files, you should keep your record for 5 good years for KRA purposes. So your record should be kept somewhere for 5 years. So I don't know if you're having, if after the audit for 2023, if I ask you for records for 2022 and 2021, you have them. So you should have a backup. And even KRA is able to recognize document in soft. So you can even incorporate saving your document in cloud, where you can scan the documents and have them kept somewhere as a backup for the loss of the manual documents. So that is what I was having. Let me see what's the time. So it's at 11:30. So I guess let me talk about this before I go to the items. So give me about 10 minutes. Let me talk about mistakes that we make, accountants make in accounting. Data entry records, errors. So we make a lot of errors. And sometimes because these errors, nobody is monitoring the errors. There are so many issues, especially when it comes to audit company, inaccurate financial recording and reporting. And especially when we are filing even data, the monthly reporting that we do, VAT, pay, those ones, you find a lot of errors. And I said, these records are self-assessment. You did them soberly. When you're sober, you did that return. So when you do an amendment, it's an audit trigger. That data you give to KRA is audit trigger, because these audits are data-driven audits. So the moment you do any error, it becomes an audit trigger. So data entries is very important. Failure to reconcile accounts. So I don't know how many of us are able to do this, and it is very important. Bank reconciliation. Accounting receivable reconciliation. Do you know, sometimes we go to organization and we find debtors. Accounting receivable is 100 million. And I'm like, let's reconcile. Let's do an internal check on these receivables. Sometimes we find somebody is indicated there, and they have never, they've never, they purchased like 3 years ago. And you find this person who was your customer, and people, whether they are customers, whether they are suppliers, whether they are people within the organization, they are ready, they read the weaknesses of the organization and they monetize on them. So this customer was created, Regina, that's me, and I'm getting goods. For instance, I'm getting animal feeds, and you're selling on credit, so I get goods. So at one particular point, January 2023, I did not pay you 50K. And I told you, oh, the chicken, oh, this happened, so give me time. And you gave me time and you left. So after a month, nobody is following. Second month, nobody is following. 3 months, nobody is following. The customer realizes that there was a weakness here. So now, possibly that time their chicken had a problem and now they have new stock. They come back as a customer. And they change their name and they say, now it's still me. My middle name is Wanja. So you create another customer who is called Wanja. It's that same customer. Then you start now buying and selling. At one particular point, then disappears. So you find that even the accounting receivable that you're having there, 100 million, 50 million, not even everything is recoverable. Most of them is actually bad debts. So are we able to do reconciliations of those receivables, reconciliation of the payables, and any other reconciliation of stocks? There are so many reconciliations within the organization that should be happening. Improper expense classifications. So when we classify an expense, This is mostly how we do it. We say general expenses. What are they? Actually, general expenses, those are all the triggers. They are not general expenses. Why? What were you buying? What was that expense? Within the office expenses, what are those? Could you specify? These are stationaries, this is water within these were lunches, this was, can we specify this so that the moment you are able to specify the expense, you're also able to monitor and make financial decisions. You may find office expenses at the end of the year is 2 million. So when I'm auditing, I'm saying this office expenses is too high. What does it comprise, this office expense? Sometimes we may find that most of this office expense was lunch and entertainment. So we can be able to figure out and say, then you need to monitor this. But when you put it together, or you put it in the wrong vote head, or in misclassified, then you cannot make those decisions. Missing or incomplete documentation, and that's what most of the time we do. Incomplete record keeping, that lack of proper documentation, transaction, invoicing, the audit trail, you cannot pull it together. When a supplier comes and gives you their statement, their statement and your statement are different. And you cannot be able to know at what particular point did this change happen. Some of these suppliers, we pay them PD checks, we give them PD checks. So there's a lot of monitoring that should be happening on that account. And that's why you find some organizations, they have payable accountants, receivable accountants. And those are some of the places where you should put a person who is sober. They might be there, but they might be just messing around with the data. So incomplete records is also a mistake. Inadequate internal controls. I've really talked about internal controls. Ignoring tax compliances. So right now we are having a lot of tax issues, and I've always mentioned here, like now for VAT, we pre-populate data. The data is auto-populated. That data is available on first, second, third, fifth, 10th is available, but on 19th, 20th in the morning, that is when you're auto-populating the data, when the system is not even working. Ignoring tax compliances, mismatching inventory records. I've talked about inventory is important. So mismatching is where I say, if you're having 10 items, one item is placed in another category. So very important. Delay or inaccurate financial reporting. Financial reporting should be done. The organization who are able to do it on a monthly basis, on a weekly basis, they are able to monitor every single element, and that's how Asian business survive. The monitoring level, the financial reporting level is extremely high. So when you don't give the data in timely basis, you hinder decision making. Inadequate cash flow management, not tracking accounting receivable and payable, ignoring foreign exchange risk. There are so many risks, especially if you're doing importation, exportation, and all that kind of information. So if you're doing that, if you're trading with foreign currency, then you need to monitor the exchange risk. Inadequate budgeting and forecasting, neglecting regulatory compliances, mismatching of fixed asset, inaccurate revenue recognition. I've just mentioned it because I've really talked about them. So premature recognition or failure to recognize revenue. So when do you term a revenue as revenue? So you might be selling, you have an LPO, you're doing the work, but at what time do you recognize that revenue? So I said different organizations operate differently. So that is something that you should consider, especially for cash flow management. Poor record keeping, lack of professional oversight. So have you outsourced? Do you have a financial consultant who you can tell, Regina, come look at our processes, look at our tax compliance, do an internal audit for our business so that we get to see, we get an external eye about the business. It is very important. So what are effective accounting practices? Implement strong internal controls, adhere to accounting standard, maintain accurate and timely records, segregate duties. Who does what? Who does what within the organization? Some of our organization, you find one person, the organization has 10 people, but one person is doing the work overtime. They are the manager, they are the cashier, they are the one interacting with the customer, they are who isn't. And you find, especially when that person is overwhelmed, there's a lot of, possibly you mounted this responsibility to this person because they are trustworthy. And I say trustworthy is not an internal control. It's not an internal control system. Trusting somebody. You should incorporate systems to operate the business. So you find that because you're trusting this person, you overload them with so many issues. Other people within this person, they will understand the weakness of this person and they will start they will start working on those weaknesses. And because trust here, because you've not incorporated system, trust is now your system, they will start capitalizing on his or her weakness. Conducting regular reconciliation, I've talked about that. Document policies and procedures, monitor cash flow, perform regular financial analysis, budget and forecasting, manage, okay. Review, audit financial record, communicate financial information, stay updated on accounting development. Don't stay with accounting system that is not working for you. Investing on training and development. Let me mention here. Sometimes we want to push our organization to the next level. We want to grow our organization, grow our cash flow, grow our sales. We want to grow, but are the people within the organization growing? Until your human resource is at the point where you want the organization to be, it cannot be. So are you investing on training and development of your human resource? Are you having the correct accountant, the correct person, the correct manager? And it's not just having the person. You may have somebody who is very good, but do they have capacities? And meaning if they don't have capacity that they can remain in that, they could be very, very good. So what you require is to capacity build them for the next level of the organization. Maintain confidentiality and security, collaborate across departments, seek professional advice, use accounting system, and establish a chart of accounts. So I guess with that, I'll leave it at that particular point. I know I've given you so many stories. When I share the notes has so many things. It has so many things that I've not mentioned. So the notes, you're going to learn a lot more. You're going to learn a lot more. I'm going to share. So my co-host, you can share the register link. From that register, you're going to register, and I'm going to send you these notes. So with that, before I talk about items and other items, I want to see if there are questions that I can answer. I want to talk about eating. So Kevin is asking, for instance, for bank reconciliation, how do you reconcile if the director uses his personal account for his personal transactions, also use it as management account? Okay, Kevin, you just need to communicate that fact to the director. the importance of bank reconciliation. With the time, when the business is growing, when the business is very small, that is why you find that the director is using personal accounts. But the business grows, the director is also able to let go. But you can communicate the importance and so someone is asking, how about where KRA asks for record for 10 years? So first of all, Stella, the regulation says that KRA should ask for data for 10 years, for 5 years. So the moment they ask for 10 years, you can actually write them a letter and tell them that you are unable to provide that information. That is one. Second, it depends also on what they are looking for. So I've seen KRA ask for data for legacy system. That legacy system was system for 2014 huko nyuma. So some of our customers who were able to, some of them had the data, so it was easy to respond because they had the data. Some of them did not have that data. So write a letter to them and tell them that that data is not available. So if you have the data, well and good, just solve the issue. It could be important also to solve the issue. So you can register there. And also, if you need any consultancy, we do a lot of consultancy, not just on the accounting structures, but on so many other items. My co-host, you can share a booking. You're going to do a calendar booking, a free consultation, and then you're going to talk to you, especially on those personalized questions. Kindly guide me on what I should start record keeping with a new school so that I am on good books to pay taxes. So that's a huge discussion, let me see, Sarah. So I think you can do a full the booking and then we can take it further and explain in a very simplified manner. If you have challenges with your business or biashara, no tax compliance, we have applied for amnesty. Can you still expect to pay taxes? So I'll talk about that when I talk about talking about eatings. Yes, I'll provide the PowerPoint. So Shaban is asking, when the director does large cash withdrawals for both personal and business use, this makes it difficult to account for such cash, especially for personal. How do you advise? Very important. By the way, let me tell you, right now when we are doing audits, I found KRA is terming as those director withdrawals as money paid to himself, whether he withdrew the money to pay for business expense, or he withdrew for personal use. KRA can term all those withdrawals as money paid to him and charges to pay as you earn. So explain that as a red flag. That's a trigger, it's a huge trigger. So that is something that I'll really advise them not to do. What do they do instead? They can have a salary and being paid as a salary from the business and account for that salary for pay as you earn. So if they need 100,000, 200, 500, just design a way of paying them in a systematic way, which is accountable for. That is one. When he wants to use money for business use, for business, sometimes we are paying via M-Pesa. You can have a petty cash management system where you can withdraw this money or send this money from the bank account direct to the petty cash management system, and this money can be managed on that system. So there are ways, actually, those withdrawals and deposits. You find the director is the one doing deposit withdraw. Those are triggers. Must petty cash transaction be on in Teams? I'm going to answer that. So Martin Ojuka, I'm going to share where the offices are. Okay, someone is asking Teddy. So this the one I'm going to answer as we go to e-teams. Do private colleges pay for income tax? Yes, Deka, you pay. You pay for corporation tax at the end of the year. And you also pay for pay. And when you're doing payroll, when you're doing the payroll, because you have staff who are training, when you're paying for that payroll, for the pay, remember we have a housing levy, we have NHIF, NSSF, housing levy, and we have NITA. So you have to account for all that. So pay corporation tax, that is doing audits, and if you've not done it, we can do it for you. I wanted to say, what are some of the controls you would recommend for cash-based business that deals with fast-moving stocks? Teddy, thank you so much for that. That is now the question for what we are asking here. So if you're dealing with stock, first of all, are you monitoring the stocks? Do you do stock reconciliation? Are you able to do stocks, physical counting of the stocks? Can you arrange your stocks in a way that you can be able to actually stock? And some of you tell me, oh, I have a lot of stuff. How do supermarkets survive? Teddy, look at how supermarkets survive. You find somebody who is counting flour, another one is counting. They even do stock take on a daily basis. So you find somebody is allocated a full row. They are doing stock take for this today, the other one for tomorrow. There's always a way. There's always a way to monitor stocks. When we are doing cash, at the end of the day, how much was banked? How much was paid via M-Pesa? Because cost of cash means also M-Pesa. There are people who paid via M-Pesa. Do you go to places where you pay via M-Pesa, somebody tells you, sina simu, that you have to show them your message. And you find that there are so many transactions. For me, because I'm I guess my first orientation was accounting. When I find such, I'll always signal you. There's somewhere I buy a lot of fruits and vegetables, and they sell a lot. So I checked, this person is just saying pay via M-Pesa, and they are serving other customers. And the SIM is just saying ti 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 ti. They don't check, just say ti 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 ti. I called him one day on the side and I told him, if you don't manage this part, you might be having so many customers, but you're going to lose. At the end of the day, this business you're operating, if you lose 1,000 per day, how much money are you making on these potatoes and what? So cash, who is monitoring the M-Pesa payment? At the end of the day, are you doing cash reconciliation? That this is what we have, but are you doing bankings every day? So some organization will not do banking, then that money is sent to supplier. So actually this money did not hit the bank. It was also sent to, how do you do those reconciliation at the end of the day? So Teddy, you have a lot. And also we find that because sometimes Teddy, you're busy, labda you're the owner of the business, you're busy, somebody else is coming there to help you, you leave them there. Do you have controls on those, on how they are doing it? If it is a new business and the director has used millions in his personal funds to do such partitioning, branding, furniture, how do you account for that? Private school, okay. Okay. So final one, someone is asking, that are fresh producers, exporters required to issue ITIMS invoices. Yes, I'll explain why. Somebody is asking on the webinar, when you come to register their questions, yes, kindly answer our questions. We ask them so that we can understand you better, especially when it comes to us working with you. So that is the reason why we are asking those questions. Just answer the ones you can. It's important for us. And because we've also given you this content, kindly I would ask you for you to be able to answer. Let me go back to the ITIMS. Just give me the next 10 minutes to finish. So I know by now we know what ITIMS is, and that you're supposed to have your sales on ITIMS. Every business in Kenya should be on ITIMS. And we have ITIMS Lite that you use the USSD code *22#. You can issue an invoice on the online portal. You can buy ITIMS machine. You can download it on your laptop. You can integrate it on your ERP software. So there are so many models of how to do ITIMS, depending on the nature of your business. So how does a valid tax invoice look like? So this is how it should look like. And it should incorporate the buyer's PIN for the data to auto-populate for VAT records. Then you have to have the buyer's PIN there. For exporters, someone is asking about exporting. Why should you do ITIMS for your exporting business? Because you're going to do refunds. By the way, for the fresh producer, kindly get our contacts. We'll help you get tax refunds. So for you to get tax refunds, KRA want to see the sales that you've been doing every month. How do they see the sales? Through ITIMS data. So it's the same way you do your sales, you also get your purchases. By the way, if you want to get refunds, those purchases you're making should be ITIMS compliant. So also the purchases, the VAT should be from ITIMS, that is ITIMS invoices, which are ITIMS compliant. So this is how it looks like. It should have the control unit serial number, control unit invoice number, and the QR code. You can scan this code. When you scan it, should give you data about the correct data for that invoice or receipt. So if you are using the ITIMS client, or you have downloaded the software on your laptop, this is how it looks like. Same details, same data. So actually up here is where it's different. So if you're having ITIMS, all of you, the only part where it's different is where now you have the company name, and some people even incorporate your company logo there. So, so that's the difference. So for you, if you're going to make a purchase, and for the auto-population of data, if the purchases that you're having, that is the purchases and the expenses, and they are not auto-populating, could be this whole process of how the invoice was raised is not complete. So before you pay your supplier or you pay for that expense, either QR code and scan the information, or come to the iTax portal and check. So we have the control unit checker, you see the pointer, and the invoice number checker. You can check the validity of this invoice. So checking the validity of the invoice is a must. So don't pay your supplier, especially those huge amounts. Whether the organization, they can't pay you until they counter check here and they make sure that they can see the invoice. If they can't, they tell you, we need to auto-populate, we need to see this data here so that we can pay you. And that is the rule. Otherwise, when it comes to auto-populating the data will have a problem. So how do we auto-populate the data? So businesses with VAT obligation are expected to upload the auto-populated, then upload the respective CSV. I'm going to show you. But what about for businesses? What about the businesses that that are not VAT, or don't have VAT exemption? Because we have items for non-VAT business. Even you as an individual, if you supply something and someone tells you, oh, I need an items invoice, you can do it on your phone within a minute. So what happens to you? This means that KRA have gotten information that you're doing transactions. And this is where the SME, the micro SMEs, this is where the catch is. That come next year, 2025, you cannot say that I did not do business. I did not do any business, because KRA will be having data that you did business. So now you need to prepare documentation for that explanation. So if you did business worth 1 million the whole year, come next year, you're going to do business income for 1 million, and then you're going to have expenses and purchases, and then you're going to have net profit, and then you're going to pay for taxes. So you can no longer file a nil return for your corporation tax. So that is important for people who are just using items and they don't have VAT reporting, or they don't have VAT obligation. And when we also talk about items, we also say that the purchases and expenses should be items compliant. So you're not just selling through items, you're also buying through items. The other portion that I want to caution you about items is that it is able to monitor your stocks, especially for accounting. And this is something that I would want you to note. Is able to monitor your stock. items is web-based, is a point of sale. So you have to, let me come to this slip. If you're able to really see here, you can see item code. You can see item description, you quantity, rate, amount excluding tax, tax amount, amount including tax. So that is how it looks like. So there is an item code. You can code your item. So if you're having 1,000 items, by the way, there are people who are not able to. Items is, especially for organization that has a lot of stock, items is requiring some training and some data entry activity. So for us, if we are helping you incorporate items, we are helping you, we are training you, and we are helping you do data entry and understand the whole entire process. So you can do the item code there. Item description, let me give you an example of a hardware, and I tell you how the stock is being monitored. So item description, you have to specify what you're selling to this customer. So if you're selling cement and you're selling steel and nails, you have to describe all of them in the item description with their item code. Then the quantity. So if you're selling 10 bags of cement, you come here to the quantity and then you say the rate. So similarly to the other items that you're going to sell. So when it comes to the end of the previous themes and ETR, we'll just write 50,000 without explanation of the items. But the items, you have to explain the items that you're selling. So this is how the stocks management is. So most of the time we buy purchases via items. So if you're buying cement from Baburi or Savannah, you're buying them through items, and they give you those purchases invoices, and you incorporate them very well when you're doing your VAT. But when you come to sell, you don't sell on items. You sell consumer, you sell cash, you pay by M-Pesa. The seller, the buyers, your buyers, you don't give them ETRs. You don't give them these items invoices and items receipts. So at the end of the day, when we monitor, when KRA monitors stocks, the whole year they will monitor. Those are audits queries that will come to year 2025. So they will say the full year they will pick your biggest item. The full year you bought items, cement worth 10,000 bags, 10,000 bags. They can see it on the system. But you sold 5,000 bags. They can see your sales. So they will ask you, how about the 5,000 bags? Where are they? So if you don't demonstrate that they're in your stocks, they can even do a physical count. If you don't demonstrate they're on your stocks, they'll do 5,000 and they look at the rate there, times 600 or 700, times 16%. So you're going to pay VAT. So be careful on items. So those stories that you used to do, you're purchasing, but you're not selling. And then your VAT is always on credit. Then the month you pay 10,000, you pay 5,000, 2,000, then you're on credit. Those games, we are not going to play them with items. So understand how items is operating is important. There's something else I wanted to mention about it. I'll mention when I remember. But items is able to monitor. Yes, I've remembered. When you go to an organization that do clubs, let me say that, clubbing, that sell beer. This is one of the places where we don't use items, but we buy all the beer through items. But when we are selling to clients, we don't use items. Those are the places, especially if you're doing huge turnovers. Come next year, you'll be audited and you're going to pay a lot of taxes on that. So here I've said purchases can be edited upward. This is on auto population. So if you find that you don't have purchases, you can edit the details. If you have sales, you cannot edit downward. So if you auto populate a sale, and this sale you see on the system is written that you sold 100,000, but you yourself, you say I sold 50,000, you cannot edit that. You cannot edit that. So it is your responsibility to confirm the review of our populated data. Let me show you. So you go to iTax portal returns, then you select VAT, then you say the auto-populated VAT return. I hope you can see the black part. Download auto-populated VAT return. Then you save it on your zip file as a zip file, CSV file. You save it, then this is how it looks like when you open. So it is going to show you the sales, and the sales is put in sequence. So you get your Z report from your items and confirm your sale. It's very important for you to confirm. Then you come to the purchases. Purchases, you're having your purchases file. So you confirm these purchases, receipt, and invoices. You confirm all of them. So if you don't find anything here, if you don't find it, what do? You're able to incorporate right now. You can incorporate the purchase that you don't find. But when items auto-population was done for the first month, this place was locked so that we could not do any additional purchases. I feel right now that it's just a matter of time they will lock it. So make sure that if you monitor your suppliers and you find that when you auto-populate this data, especially the purchases as a problem, you find that you don't have your purchase, all of them here, start telling your customer, your suppliers to incorporate your PIN in that invoice or in that receipt, so that when you auto-populate the data is correct. By their organization, that they cannot pay that receipt or that invoice if their PIN is not there. So make sure that the person has incorporated the data. The moment they incorporate, then you're able to auto-populate the data correctly. The organization, when they auto-populate the data is totally 100% correct, and they find it. So there are other people who say, I find a purchase here and I did not make a purchase. But you know what is a profit for me, because I'm going to claim I'm claiming a purchase that does not belong to me. Let me tell you, the system could be having issues, but the moment that system will be reconciled, whatever you claimed is going to come back, is going to be removed, and you're going to pay that VAT. So if that claim, if that purchase does not belong to you, remove it, because the system within this year, by next year, to be reconciling anything that you claim that did not belong to you, you'll be paying for it. So make sure that any data you find there that is not for your company, don't take it that this is a good one. No. So after that, you import back the data, and this is how you import back the data to the VAT iTax portal, and then you validate the amount, and then you pay. So it is as simple as that. So also, if you are able to confirm your purchases, you remember what I said, don't pay for anything before you come here and verify the invoice. So if you verify the invoice and you saw it there, then it's going to accept population. So I know you have so many questions on that you can ask. So because of time, I'll not talk about NSSF. SHIF, we know there are changes. Let me talk about affordable housing levy. And there was a letter, my co-host did not put this letter there. There was a letter that was moving. I mentioned it 1 week ago, that the affordable housing levy is also payable to rental property owners. So you'd also do 1.5% on the monthly rental income. So you also pay housing levy together with the MRI. So MRI, you pay it by 20th, 7.5. Then you also do housing levy 1.5 on the gross rent that is on before 9th. For informal sectors, so the business owners, so who don't have salaries as an expense, so they do 1.5 on their gross sales per month. So the affordable housing levy is affecting all businesses. So business one, you're having employees, and you as a director, you're paying, you're also having a salary, and you're paying housing levy. If you don't have employees, you're sole proprietor, you're doing a business, you're doing turnover tax. And by the way, turnover tax is at 1.5%. So it was reduced to 1.5%. So you do the turnover tax 1.5%, and you do 1.5% of the housing levy. So the housing levy is also payable to informal, to small businesses, to sole proprietors, to rental houses. So that was something that it was a letter that was there. So how do you file for housing levy when you don't have payee obligation? So when you don't have payee obligation, so you open the portal, you come for payments. So payment registration, you come here, you're going to see agency, choose agency revenue, then you choose housing levy, and then you choose the month and the amount that you're paying right there. So you do it as a payment registration. The process is very, very simple. So these are process for people that don't have pay as you earn as the obligation for pay as you earn. So finance bill, let me see the questions. So finance bill, there is an introduction of the 2.5% of the motor vehicle value payable upon insurance when you're paying for your insurance. I know this has been a hot debate, and I say that the bill is on public participation. You can participate, and that is one of the huge issues. Withholding of goods supplied to public entities. And I explained this finance bill last week, so you can go online and look at it. Look, it was a whole hour discussing some of these items. So when you, with the withholding, when you do with supplies of goods or services to public, these are counties, parastatos, and all that. At the moment, they do 2% of VAT, but now there's a 3% or withholding. Now this is on the corporation tax. So it's like an advance payment of your corporation tax. So at the end of the year, when you be doing corporation tax, you'll be recognizing it there as an advance payment. So transaction of digital marketplace, I really talked about digital on Wednesday. Let me mention for VAT, the mandatory VAT registration threshold to be at 8 million. So it's from 5 million to 8 million. So I guess that was a huge one on this. Exemptions, VAT on betting, gaming, Rotary, VAT on various, okay. And then there was excise duty, a lot of excise duty on financial services. So also quite expensive. Tax procedures, objection to from 60 to 90 days, a bit of that. So who are we? We are RWK Associates, a registered audit firm, and our offices are in Nairobi, Westlands Road, and also Thika Road. You can see there, and you can get our numbers. We can help you on your bookkeeping, on your audits. If you're not filed for your audit, we can give you at affordable rates. You can talk to us. And I always say that the auditor that is doing your book should understand taxes, because that data is audit trigger. So you can talk to us on that, and we can help you do internal controls, internal audits, tax. I'm a tax consultant, so we can help you do tax planning. If you have a tax issue, we can represent you to tax authorities on it. We can help you go to the tribunal, to the ADR. And there's a free calendar booking on the chat. Just make a booking, and we're going to talk to you, and you're going to take the conversation to the next level. For these notes, I'm going to share the notes with you. There was somewhere that you're supposed to fill in on the chat. So let me see the questions, a bit of them. So someone is asking, is the new 1.5% affected? Yes. What TOT affected? Yes. So Nasibo, if you go online, if you're paying TOT, it was done an amendment last year on the affordable housing levy. There was an amendment done March this year that incorporated the TOT from 3% to 1.5%, and the system was already changed. So if you're paying turnover, you're going to pay it at 1.5%. For me, the only part that I feeling that it's a headache for affordable housing levy is the many. If you've been doing rental, now you have to do something else. Rental was reduced from 10% to 7.5%. Then there's 1.5%. Just feeling like, why did you not take the 10% and from behind the scene you go get your housing levy from there? The same way with the turnover tax. Why do I have to file this document twice? Why don't I file the 3% and then you go and subdivide? Okay, so I want to see some of the questions and answer just a few. So I work for a motor dealer company that doesn't have VAT obligation, and we have complied and registered for ETIMS. Kindly advise how we use ETIMS during purchases and sales. Remember, Paul, there is a regulation that come next year, 2025, when we are reporting for financial year 2024, all our sales have to be incorporated in the ETIMS and our purchases. So for you having ETIMS, you do ETIMS. ETIMS is the VAT has three categories. It has VAT, which is standard rated, it has exempt, and it has zero rated. So if motor vehicles is exempted, that is what you do, ETIMS. And then you also buy. If you're doing importation of this vehicle, there is the data that you fill in at the point of entry. You can use that data to monitor, to show your purchases. So you can still incorporate all your data under ETIMS. Must petty cash be on ETIMS? So petty cash is what? What are you? What petty? Let me see petty cash. So you've gotten petty cash and you're paying for fuel, you're paying for something. Yeah, if you're paying for fuel, the fuel ETIMS should be there. If you're paying for border guy, that's an emolument. So what is exempted from ETIMS is a salary, those emoluments that we pay. But also, we should have correct recording for it. So you register and then you get the notes. Okay. So some of the questions someone is answering for them. So how do you deal with a situation where you did an invoice that had a discount with a negative figure, but upon transmitting the invoice to KRA, they assume the discount as positive figure, meaning the VAT figure becomes more than what you had invoiced? Sophia, I think you did the ETIMS in the wrong way. When you're doing invoicing, there's a problem. But you can raise a credit note. You can raise a credit note and reinvoice again. I have a question regarding VAT payment. Can it be paid in installment? For instance, where a customer haven't paid yet and we don't have it. Yes, you can pay in installment, but know the penalties and interest are accruing every single day. So you can pay, but also account for the penalties and interest. How do you handle contribution made to charitable organization that is not able to provide a tax exemption certificate? Why are they not able to provide? So what are you doing? Is it a CSR for the organization, or what? Because the documentation is where, during audit, those are some of the audit queries. Right now, you might just come as a charitable donation, and you don't have a problem, especially where you say contribution in millions. That is a significant data. So if you have a significant, you may do a donation of 50K, possibly even if KRA would ask you a question, it's very insignificant. But if that data is material data, then correct documentation is important. So let them give you the exemption certificate, that's the correct certificate. For housing levy for businesses that don't have pay, you have said we pay against our groceries. So what happened if in a certain month you have not done any sales. No problem. No problem. Actually, the 1.5% is done on the sales. So if you don't have, you just file it a nil return. Helen, so is a charitable subsidiary. You can talk to us, Helen. We can see if we can be able to help you. So Nahum has also, okay, I've answered that one. You can pay the VAT in installment, but it will be accruing penalties and interest. Kindly know that and also pay for that. Pay for and remember, penalties created today, like year 2024. They don't there is no amnesty for that. So remember that we have amnesty for penalties and interest for year 2022 from December 2022 huko nyuma. So don't create those penalties right now. There will be no amnesty in future. So if you've not been able to apply for the amnesty, you can do that. You can do that, or you can talk to us. We can help you on that. So with that, I wish you a lovely afternoon. It was a pleasure having you here. If you have an extra question, you can call us. We can help you understand better. We can help you understand better, and you can be able to be compliant. So we thank you for being together with us. Remember, in the month of July, August, we're going to repeat the taxation masterclass, so you can start saving on them. We're going to release the new dates. You can also, we're also going to repeat the bookkeeping masterclass, so you can also do that. So from there, I say thank you so much for being here, and for you learning with me. So God bless you. Yes, the recording is available, Jane. It's available on YouTube, and also we were live on Facebook. I'm hoping the live data, the live recording also be available. God bless you. I'm going to share the notes with you, and I wish you all the best. And I wish you that all your businesses thrive. They thrive and thrive. God bless you. Thank you so much.